In this video, I'm going to use the rules to a popular trading strategy created and documented by Larry Connors and Cesar Alvarez in their book, Short-Term Trading Strategies That Work. The strategy is based around signals from the RSI or Relative Strength Index indicator, and they found that using a short period, like a 2-period RSI, rather than the standard 14 period, it was very good at identifying buying areas of stocks and stock indices like the S&P 500. I've done a lot of work myself on the S&P 500 using signals from the RSI, and I've even created a few videos and put them on this channel too. However, in this video I'm going to be taking the same strategy but applying it to the Forex markets, and instead of only looking for buy signals, I'm going to be going long and short. The rules for the strategy are very simple, and it's really easy to spot trades on the chart. And for this study and this video, we're just going to be sticking with the daily time frame. The first thing we need on our charts then is the RSI indicator. We're also going to be using a 200 period simple moving average, or a 200 day as we're looking at the daily chart. And we're only going to be taking long trades if the price closed above the 200 period moving average, and only looking for short trades if it closed below the moving average. Once we've got our RSI indicator on the chart, we want to change the length from the standard 14 to a 2 period, so a much faster indicator. And we're largely going to be looking at these two levels for entries, 10 and 90. When the indicator closes below 10, we're looking to buy. And when the indicator closes above 90, we're looking to short sell. And Larry and Cesar suggest various different exits for this strategy, and they all exit into favour of the position. So if we were long, then we would exit into strength. If we were short, we would exit into weakness. I'm keeping the exit rules identical throughout the study, and I'm going to be using RSI for the exits too. So if we're going to get into a long trade, we're going to exit a long trade when the RSI goes above 70 level. And if we're in a short trade, we'll exit the short when it goes below the 30 level. Now, I've already done a quick test on all the major FX pairs, and I've found 3 which might be worth investigating. All the testing is done from January 2008 through to January 2022, and I've included 6 pips worth of costs round trip for each trade. So let's go and have a look at the best 3 Forex pairs for the RSI2 strategy on the computer now. First of all, I'm going to show you how the trades appear when they come up on the charts. And then for each of the 3 Forex pairs, I've actually run an optimization on the entry levels, so the 10 and the 90. I've gone from 5 to 20 for the long entries, and I've gone from 80 to 95 for the short entries. And I'm not here today to tell you what I think's best. I'm here just to show you the information, and hopefully that information will help you make a decision of whether or not this is a strategy that you'd like to trade. So let's have a look how the trades occur on the charts. So this is a daily chart of US dollar, Japanese yen. This cyan line is the 200 period moving average. So trades above it are long trades, trades below it are short trades. And I didn't mention earlier, but the stop loss is at the 200 period moving average for both long and short trades. So let's have a look at some clearer examples. So long example here, look, RSI has closed below 10. We buy at the open of the next bar. Then the RSI closes above 70 and we get out at the open of the next bar. Short trades, RSI goes above 90 and we short on the open of the next bar. If it closes below 30, then we cover on the open of the next bar. Okay, so let's have a look at the results. First off, we'll look at Euro Pound. And I've run that optimization, and I'm just going to sort them in net profit. And we're looking at the long entry level and the short entry level. So the best is actually a long entry level of 5 and short of 85. If you want to keep them symmetrical, then the best levels are 5 and 95. I say symmetrical, we're looking at like a 5 and 95, a 90 and 10, or a 20 and an 80. But the best is 5 and 85. The standard levels of 90 and 10 was actually a losing strategy, lost a little bit of money. So let's try the best levels, which are 5 and 85, and then we'll try 5 and 95. Makes £10,000, not a lot of money, doesn't trade a lot. That's what the equity curve looks like. And total trade analysis, average trade 74. Don't forget we have got costs included. So let's adjust those levels to 5 and 95 for a more symmetrical entry levels. We've got a bigger average trade, we trade less, making less money, trading less, and the equity curve is similar. So that's what euro pound looks like. Let's have a look at Australian dollar, US dollar. First of all, let's look at the levels of 90 and 10. There's the equity curve. It's going up, but there's definitely some decent drawdowns. Makes $11,000. And the average trade $77, 144 trades. Let's look at that optimization report. Again, I'll sort them in terms of net profit. The best is actually 10 and 80, not 10 and 90. The best symmetrical one is actually 20 and 80. We were using 10 and 90, which is here. So let's try 10 and 80. Trades much more, better average trade. Makes a lot more money, $21,000 now. And the equity curve is probably no better, is it? So let's move on to the last one, which is US dollar, Japanese yen. Firstly, I'll show you the results using 10 and 90 as the levels. And then I'll show you the results for the best performance. That's the equity curve. Makes 2.2 million yen. 160 trades, average trade of 14,000. Let's have a look at the optimization report. The best levels are actually 5 and 85. I know 5 and 95 work, but before I show you the results for the final pair, if you like this sort of mechanical trading strategy, then you should probably download my 22-page Beat the Market Strategy Guidebook. And I include 3 more much better strategies than these actually. And at the moment, if you find the link in the description down below, you can download that for free. So let's have a look at this final performance report. So 85 and 5 are best. So let's have a look at this. We've got a larger average trade now, 17,000. Making a tiny bit more money. And the equity curve is better. I believe the equity curve was actually best using 5 and 95. Let's just show you that. That's the equity curve using 5 and 95. Net profit is a tiny bit less than before. The average trade is a lot higher. I'm making less trades, obviously, because the rules are stricter. When I ran the initial test for all the Forex pairs, I was just using the levels of 10 and 90. And if something made a bit of money, the equity curve was moving in the right direction, then that's why I've selected those 3 markets, because they were the best. And then I looked at adjusting the levels or running an optimization to see which levels were then best. Obviously, I haven't adjusted the exit levels yet. You never know. Using different exit levels, some of the other pairs may have worked too. But with those levels, those 3 were best. Now, although you could, I'm not suggesting that you go out and trade the RSI 2 strategies on those Forex markets. This was more a study about documenting what I found when I applied the RSI 2 strategy to Forex, just to see what would work. The next thing I'd like to look at is changing the time frame, because we've only looked at the dailies so far, and I wouldn't just check the daily time frame on the 3 markets that I've just showed you. I'd actually go back and check all of the Forex markets. Just because the RSI didn't work on the dailies on some of the others doesn't mean that it wouldn't work on the hourlies or the 4 hourlies on the others. That's something worth checking. Anyway, although the results from these strategies are nowhere near as good as most of the strategies that I show you on this channel, hopefully that information is useful for you, and maybe you were interested yourself on how the RSI2 strategy worked on Forex. Well, I might have saved you a lot of time in a lot of manual testing if that's how you test the markets. So I hope you found the video either interesting or you've enjoyed it. If you have, please hit the thumbs up, and if you want me to do some testing on some other time frames for the Forex markets, let me know in the comments down below. But until next week, this is Jared Goodwin, and thank you.